Hey guys, it's Crypto Sniper. Yep, and we're going to have an update with you on Bitcoin. Also have a flyby hex. We'll go have a look at Ethereum. But mainly I'm going to be talking about Bitcoin, the main guy, and the totals, the aggregates of what the total market caps, total 1, 2, and 3. Mainly because we want the general direction of the macro market. Is money coming in? Is it likely to trade up over the short, medium term going forward? That's right. While you're watching this, right now, hit that puppy licks button if you want more crypto updates. Smash him now. Bang! Hit the puppy licks to have your face licked in the morning with the puppy that loves you. And also hit the smear button. That is the share right now. Zoop it over to the other side. So we're looking at Bitcoin. And I'm going to be making in this video the differentiation between the sell-off from the head and shoulders that we called to the short side into the falling wedge that we called an accumulate zone for further upside. And I'm going to make a distinction between that area. So let's make this clear. In this video, this is what you are going to see as to why I assess on the whole that these two events are entirely different and why other people think it's all just the same. So that period from the triggering on the right shoulder on a rising wedge on that right shoulder all the way down to the target being run, the 29, and then this net accumulate phase, which was very, very painful to sit through, and you could buy the dips, marginally lower lows. And then I'm going to compare that, and I'm going to say to you that you cannot be assumptive about these things being the same. This down leg in the channel and the current price structure. That doesn't mean they can't both resolve to the upside at some point, but they are definitely not the same. I will also, despite everybody's claims, I will also make you aware that this huge area of accumulation that has served as support is there without doubt. It is there. You were accumulating on that first pullback, also a falling wedge at the time when we were working our way up. That was post our first cup gold nugget target, the best time to be leveraged long Bitcoin. Again, another falling wedge into this zone over here that I've highlighted over here. And now you are sitting on the roof, but you have a different structure. Technically, this matters. This structure is like that, and we'll be going into it. So that's what I'm going to delve into this video. Just before we go into the detail of that, I want to tell you that it is last chance essentially over the next week or so for those that have ever thought of doing a trading metamorphosis program with us to actually get a physical event with me included. That's right. You will get all our advanced content, stuff that is very rarely spoken about here and generally not covered in any great details of key inflection points, grind line theory, broadening structures, how to trade them, what they imply in terms of future price behavior movements on balance of probabilities. Nothing is guaranteed. We'll also be talking about early entries, later entries, and just-in-time entries, what that all means, the effect on your risk-reward ratios, and a variety of other concepts, plus a whole host of other advanced materials. Psychology, mental, you name it, and other technical aspects too. So what you could do is, if you were a trading metamorphosis program, you could already be ripping through during the course of the next couple of weeks of beginner and intermediate state. You could then meet with me and other community members. So our existing community will all have the option of coming personally, and we haven't done a physical event since 2018. We pivoted away from physical. We've done very high quality recordings on all the course content for the basic, beginner, intermediate, and rolling into advanced, and this will be part of the most advanced content, which is really isn't available anywhere else. It's ours. It's not traditional technical analysis at all. It's 35 years of practical trading in the markets captured, and I'd rather put it in program courses for people that truly want to trade than to throw out $30 books that some people will read and never implement. So that is essentially where we're at. Let's get into the course content on Bitcoin. I'm also going to be touching on dominance today and why you should keep an eye, and why it's also my assessment that overall in most instances, not exclusively, in most instances, remember there's always exceptions, there's always a probability element. Is it high probability? Is it extremely low probability, like lottery winner possibility? And there's still amazing things can happen by hook or by crook. But generally, if you're trading with the probabilities on your side, you generally get luckier. For example, in the traditional markets, we've been biased net long oil, we've been biased net long the USD ruble. Community members have just smashed it. Other people can't even enter the trade. It's on close only. They've just smashed it through targets on the recent events. Hence why I'm in my military regalia. And I can tell you, if you hadn't got the trades on early, long kind of before, if you weren't already stalking this trade before it was even news of any great note, you wouldn't have got into the trade. You just locked out. That's kind of in the traditional markets. Crypto has been moribund. Let's deal with why that is. So Bitcoin, in our opinion, the key thing about this, and hopefully you'll get a few learnings, is that we had the head and shoulder that we called over there. You had a complex head and you had your right shoulder. 47.5, I think, was the level number we ended up going with. You can see it there, actually. That's the neckline. I should remove that one. That was the neckline that we went with. And we said to you, this is a loss of momentum. Everyone was calling 250,000, year-end 100,000. Yes, when we had an average styled structure, we did call for 80k whilst this was continuing its break, and it did invalidate, and then that potential structure goes. So all the time there's possibilities that are looming, that are setting up, but we always have an invalidation level. So it ceases to exist, it ceases to be a view, and you drop it like a hot potato. That's what traders do. People that go, oh, flippity flop, don't understand trading. You have a structure, you have a level, it was trading to that, it was continuing to go up, turned over here, for example, when we were going into the year end, and we thought, yeah, well, there'll be turkey for Christmas, and then it turned. And that falling wedge turned, and the level was run down there. We have been essentially bear after this candle rallied from here. Sorry, it's not a safe market to be in. From the 52k, when this came down, we said this is not right, it shouldn't be doing this, and it's invalidated the upside structure. So it's gone on further down, and the question now is this in the red over here, and let's just put a square around it, the same as that in the orange over there? And my answer to you is no, it is not. So how and why, and what are the price behavior typical patterns that occur with this? When you bleed out lower after a major sell and you make marginally lower lows, this, and then fail to make a marginally lower low, this is what's called hammering out a low. A lot of the compression was across the top, but there was some tactical, moderately retreating defensive buying. This gave a falling wedge, which on balance of probabilities in most instances, never exclusively, there's no 100% in the future when you're talking about the future, gives you the upside break, and we were actively long, and the best and the highest momentum part of that move was the beginning, that part. It went into a broadening, then it continued a little bit, then it started to roll over, got a bit heavy, again, falling wedge, into here, final squeeze, and then bang, up you go again. Then you got another good leg of progress. The marginally higher high, guys, has been an ominous shadow over crypto. One of the worst things you can do for going to new highs is to put in a marginally higher high and then have a substantial sell-off leg. That just shows you were beaten. You did the support and resistance trap. You got all the new highs traders long that might have got long at 64. They got washed into 69, and then they were down, and then they've eaten all the way down. Most will have been stopped out if they were using any form of leverage on the way to the downside. So these hammering out lows is a basing area at previous points where you hammered out lows. So this orange box is a significant range. It's roughly in around the 28k to the 34.5k that you've dipped into. Now, the problem you have here right now is this is not what we call hammering out lows. This is trying to hold a level and grind up. We talk about grind line theory. You will get it physically in the event if you choose to come. If you can't come to Panama, of course, you will get it online anyway. So it's not like you will miss the content. Plus, you'll see your fellow peers and their questions. It may be recorded and you'll maybe see it retrospectively, but that's all good and well. You will not be denied, but it's far better if you can make it. And there's no extra cost for that, by the way. There's no extra cost for the fact that we'll be including the physical delivery of our most advanced content, our freshest and newest as well, that will be put together. Anyway, back to this. This is what we call a basing ascending grind line. You'll get covered that in that content and what it means. This is more prone to lead to downside continuation patterns. You will not learn this anywhere else. You will not learn this. This is HVF method theory, and I'm assessing and I'm telling you this. A broadening megaphone with an upside tilt and on a bear pole tends to be continuation. Now, many of you will go, you're wrong, we're up today. You know what? You're probably going to go up for quite a bit more. You'll probably run and test that key 42K again. That was top of the level range where you turned there. You had a broadening structure on the upside there, and you can see how it can mean upside continuation too. You had support there. It's a very critical level. You had that super wick on the spiller, the absolute thriller all the way from Manila. You had him over there. The 42 is an important level. You've got a broadening structure that I've drawn for you there. Guess what? It was continuation to the downside, and it had a nasty final spill. That's why you're getting reaction now. That is why you're getting a reaction now, a nasty final spill. So we're here to warn you that overall, whilst you might be up this week, the problem that you should have is where are we next week, the week after, and the week after that. And if you want to be a hodler and you're saying, that's it, I'm going to chase the current momentum, Bitcoin's up, Russia's releasing. If you're news driven, Russia's releasing a crypto, everyone's releasing a crypto. Crypto is the solution. We're getting this hivening of the financial system. You think it's a hot war with bullets and fighters. It's actually not particularly hot war. Yes, people are dying. It's a tragedy. We hate it. But I can warn you that the real unstated war that is going to emerge out of this and become more prevalent in time is that of a financial nature. This drives Russia into China's hand. They cooperate, they support. China is very advanced on a central bank digital currency. Russia is talking about much the same. This is initially a de-dollarization. That is not initially going to be bearish for dollar. You just heard me say that. Yes, it's not initially. We are dollar strong. Long term, it's the end of the fiat system, which will not only finish dollar, but it'll finish all the emerging currencies and the euro before it, and then we'll pivot into the central bank digital tokens. I'll be doing shortly, by the way, a reset video on more of the hard topics around this war, financial, prep, defense, and everything else, which is another second great reason to come and visit us on your trading metamorphosis program in Panama, because you can actually get some proper defense. Other entities, apart from things held in your name, which have higher levels of protection at different levels of taxation, in some cases virtually zero, and will live long past you, that will avoid death taxes and everything else. And those partners of ours, you can meet them in our offices here in Panama. So second reason why you should come and attend. Apart from also, third reason, meeting all your fellow trader sniper friends, people that are not bought in or sold by mainstream media on all things March 22 and what's going on here, and are very focused on their freedom. If that sounds like you, maybe you should be talking to us. Anyway, so this overall, despite my suspicion that you'll actually trade up, and we teach more about why that is, you'll get an up leg here, but that's, as I say, it's premium content, you can find out about it, but why I've assessed you'll actually trade a little bit up. You could even run this 42K somewhat. I don't think you're going to be running the previous high, and then you will roll over, and it'll look like everything's fine, and yet you're kind of settling down at 42 until suddenly it isn't, and you get a sell-off to to the downside. On balance of probabilities, that's our assessment. This is a dangerous time. Why? Because you have a fiat system failure where there is fear, and initially the money runs into the dollar. You're going to run into strong dollar events. By the way, the USD ruble is not the only one that in time will be doing a spike-a-mental. Go and watch the Market Sniper YouTube channel. A long-standing YouTube channel that we've been covering for immense lengthy period, covering the dollar strength and telling you also which of the major currencies are also going to do a similar event as he plugs power in. Go and watch that. And there are a number of other currencies that you mentioned, such as we did the TRY, we said the Turkish lira before the ruble, we've said the ruble, we've also given you the Korean won, the Hong Kong dollar, and many others. And this is a series of currency loss of valuations of the mergings, the unfavorables against the dollar that will be ongoing, and will also include the euro losing ground heavily to the dollar and the Swiss franc. So these things are all important because they feed into crypto. You're thinking, I'm not interested in that. Is it Litecoin versus Ethereum? That's all your game. Sorry, the big world has intervened right now on your game. Geopolitical events are chasing FX and are chasing, and the bulk of the money is still out there. And when they, unfortunately, when they fought, you have a smelly hurricane coming down your way in the crypto markets, and that's just how it goes. They are the big boys right now, and no matter how dumb or how stupid you think it is, or how mean or how non-pacifist and aggressive it is, it still has material effects. So this structure is very different to the grinding out. Here, all the sellers keep wanting to get lower, pushing hard, really puffing themselves out, making a marginally lower low, then getting rebuffed, and then squeezing, and they've got nothing left in the can. That is the end of the scared money getting out. Guess what happens? Push up. This is buyers desperately trying to hold the line, weak rallies without follow through. Failure to make a new high here will be a real problem, and will set up structure. But we're going to try, and that is part of the exhaustion, the same way as that up leg is going to be exhaustive, and it's going to be, oh, come on guys, hold the line, push up, hold the line. God, it's tiring. And that problematic scale of this pattern could actually see this orange square of immense support, which has been immense support, being run. So that's it there. Let me just again make it in orange, shall I, before I confuse everybody. So this Picasso that you're watching emerge out of the charts here, proper scribbly little Picasso of great note. I'll make an NFT out of it, and I'll put it up for $10 million, and you guys can all fight to see who throws their money at me first. How about that? Isn't that an awesome idea for a business? Anyway, so this whole level, your little burger there, your little orange burger with your locust patty in the middle that the World Economic Forum is building for you, is probably going to come under some stress when this continuation pattern, or if, let me rather say, when sounds like certainty. There's absolutely no certainty. If we lean on here and we let it go, you will probably end up into this zone, and potentially even lower than any of these lows that you've had before as part of that run. Will it be events driven? Of course. Will there be some news? Of course. A release of a central bank digital currency that can be flooded in the market is actually a rival to crypto. And if they're going to make lots of advantages of it, it can be used more easily, and you can have a wallet here, there, everywhere, and on your devices and built in. It does come to normies that have never participated in Bitcoin, that were told it was for buying AK-47s on the dark web and for hiring assassins. It's going to absolutely be, okay, this is government. Remember all those people who bought the official line about the March 2020 events? They'll go with whatever the government brings them. And that is going to be, in some senses, a rival to it. It doesn't necessarily have to be good initially for crypto. The only thing I do feel is at the moment is that this will be part of a deflation. So deflation is a word I want you to hear and to understand. We are in a contracting environment. They have done so much damage to the global economy with the March 2020 events. There's so many small businesses that don't exist anymore. There's so many little restaurants that have been closed and people have exited. We have actually at a small business level totally contracted, and what has actually happened is the oligarchical megacorps have hoovered up what little there was to be had around. Now there is a key level of significance. So we're looking at Binance, which means it's a tether cross here. There's a key level of significance that could be a bounce point if we turn out to be accurate on this. So you're going to go and you're going to squeeze higher. It's going to be unspectacular, and then there'll be quite a hard sell. Note how hard sell this was, and it came really flat and low but failed to run that. What you really want is marginally lower lows. You want to get more towards the structure of this. That shows some degree of basing. You're not. It's different. It is absolutely different. And the 42 is a key level. So you'll run through it again one more time, and then you might just get up to it and fail, and then we could have some nasty sell. Again, it'll be news driven. It will be news driven. Now, that high, that scenario that I'm describing with that basing ascending grind line comes into play, as I say, if we fail to make the run of this previous high. I think we've got up to the 46s up at this point over here. Now, just because it goes higher doesn't mean you're off the hook. So were that not to happen, and you actually trade a little bit higher and you say, yeah, you see, you were wrong, and let's say you make the 47.5 and you get a pop through and you go here. That doesn't mean you're out of jail. Because of the structure and the non-bottoming nature of it, what could then end up being the case is you could just get some flagging structure, which still has risk for downside. So even if incorrect on the upside leg, and that you go higher and you meet the next big key level of significance, which was, as we've described it, the neckline for the head and shoulder there, which gave us the perfect exit on that wick at the bottom and basically called the low. If you were to get that and you have that downward channel, you then have problems of a different nature. You have a potential flag, and you could come down to the 42. That 42 could even be a break point to the downside. So generally when you get channeling like that, the move is also continuation. So there are lots of price behavior scenarios for downside, and there's far less for upside. There's never none for upside. There's always at least one. If you went super strong and you paused exactly at that level and you made a W type bottom, and then you had a minor little dip, you could get a scenario where you broke up, return move, and then go to the upside. So W bottoming would be one way in which you reverse that. Ideally then you want to meet the key level of 46.5 over there and get, that's Vladimir Putin just wanting to check in with me there. Tell Vlad I'll speak to him later. But he can proceed with the CBDC thing I was talking about. Anyway, so the W bottom to the side over there, that could be a scenario where you squeeze higher. And ideally for that, you want to go up to a very similar level. Very similar. It doesn't have to be exact to the penny. A very similar level. You'll also note there was, this broadening structure with a bit of a flat bottom there. That was a key point that you broke. So there is a bit of a 46.5, just shy of the 47.5 level going on, and that is how you would do it. You'd probably have a small rest and then you could work your way up. That is how Bitcoin could correct. So I'm giving you a scenario for how it could fix its price behavior overall structure. I'm just going to say to you, that's probably one of very, very few. I know some of you think, just what if it just gets a major green candle like that? Technically, that just doesn't seem to happen, because the people that are in the know already start drip feeding their money in. If there's going to be some form of a news event that is going to lead to further upside in that particular market. And typically you will see. So there's always an element of an insider, and you always see their footprints in the price behavior. You rarely get, oh hell, total random event that absolutely nobody saw at all coming. Hey, we've all got to react, pump it to the moon. You just don't tend to see that. You would already start to see some degree of that structure playing out. In other words, money works its way into a market slowly by the insiders. with big money, so little number of people with big size, and then some people start to get whiff of something building, and then it goes. We're not seeing that. So the notion that you're just going to get a hope. I remember when I was an early trader, I used to just hope, what if we just suddenly get a big ass green candle? Somebody do something and moon it. If it isn't showing already, it's not coming. If some element of that is not already showing already, it's not coming. Because you are never the first. You are never on the first move. There are always insiders, I'm afraid. Anyone who thinks that you have pure, clean markets must check what an awesome trader Nancy Pelosi is, for example. Oh my goodness, she's just the bomb. While she's sitting there doing her Bolshevik communist dragging America into the absolute gutter. She's also mooning it on the trading side. Barely ever gets a trade wrong, thanks to her, her Sabbatean Frankist husband. But anyway, so that is where we are with that. Now, the other part that I wanted to talk to you about that is technical and dovetails with this is our analysis we did some time ago that we were sharing in the community. You didn't get this, it didn't go out on YouTube, but we're talking about Bitcoin dominance. I have made some references to it, but you'd have to go fairly far back. Also, by the way, if you want to know our favorite short, we did let it slip once. You can go fairly far back in our feed to go find out which one that was. Go watch our legacy videos, or better still, get involved with the community and our ongoing webinars on its progress. I would expect that particular token to overperform in the event of the Bitcoin downside. Yes, we will short crypto. Yes, most of you hate me for saying that. We should all be holding the market up like Atlas, standing under a rock fall, catching stones and then kilotons of rocks and holding it up. No, you take shelter and you find a way to profit from it. Unfortunately, you can't stop rock falls from coming down on your head. So just a little bit of a look on that Bitcoin dominance. The bull market is generally on, so I'll take the eye off for a second, the value of Bitcoin reducing in crypto for alts to perform. And most of you are sitting in some form of alt. Your alt is different. Your alt is better than the other one. ADA is better than this. I'm an ADA god. HBAR is going to be better than all of them. It's going to win. You've all picked your team. It's Liverpool versus Man United versus Chelsea, or it's Green Bay Packers versus Patriots, or whatever. It's all just tribalism. Yes, there are some projects that are clearly better than other projects. That's not to say that it isn't. But the point of the matter is, if the overall macro market is going down, you will go down with it. Take a swig of heavy coffee. So this was your bull market. And again, what we were highlighting, much like the 3 impulse falling wedge after the head and shoulder, is that this was looking like turning. And this is another reason why we've been very cautious on the crypto markets. Squeezy, Japanesey, it was getting a little bit, let's do that draw again, it was a bit cack. Marginally lower lows on your Bitcoin dominance and squeezing down like that. And what do? You have 3 impulses. And what does this generally do? What does it generally do? In most instances, not 100%, and we teach you when to recognize when those exceptions are more likely in our program, in the recorded content, beginner, intermediate, advanced, at the event that we will be doing for the first time since 2018, and it's going to be totally different. It's going to be only on advanced topics. You've got to have watched all the other materials, but there's plenty of time still for you to do that. What are we going to be talking about? In general, that this breaks out to the upside. So if you think crypto is going up, it doesn't have to go that high, by the way. It could go higher, could just be a small move up to somewhere here. That's not indicative of how far I think it'll go. It's indicative of direction. If you think crypto is mooning when Bitcoin dominance has an upside side, ignore everything I've just said. Could it be? It's possible. Bitcoin could start going up a lot quicker and alts could creep up and Bitcoin could absolutely throw it up. It's quite possible. But the whole crypto market was going up here during that period of price behavior. This was good stuff. Remember that May high of 2021? That's it. There you are. That's the one diagonal of this rectangle to the other. That is your period when you were doing great. Actually, guys, if you're smart, you should be wishing for ongoing Bitcoin dominance reduction. And anything that could imply an on-balance probability assessment that could see Bitcoin go up. And remember, it could first, before it breaks, still come down another leg. That means you can get a little rally and you can go, Sniper's wrong again. Oh, he's such a good contra-indicator. I get all these little clowns. There's always one guy who thinks he's funny and uses that one. Man, I've been in the trading floors for so long. It's not even a joke anymore. It's stupid. The guy who says that, who thinks he's funny, is a noob. If you want to be a noob, be a noob. That's all good. But you could get a little bit of a dip first before you go. It's unlikely you will run that low. During that period, as I say, all the YouTube stars love to tell you how wrong you are, and it's not about right and wrong, it's probabilities. We're absolutely guaranteed. I continue to do this knowing in umpteen instances I will be incorrect, and in some other instances I'll be accurate. It's about whether you make money or not. How much R's are you getting in reward on your winners versus the 1 R you should be losing on a money management control trade on the downside? And that is all the games. And you can be wrong 4 times out of 5 if you're making 15 R's on the one you're right and you're losing 1 R on the other. You are killing everybody who's busy telling you how wrong you are continually. So anyway, up you go. This could see deeper. You could cross into the 50s. This is a psychological Bitcoin level, 50%. Now everyone will think the Bitcoin maxis will love that, but the problem is it'll be on a downward swinging Bitcoin, so they won't love it too much. They'll only like the fact that the dominance has gone up. They'll be highlighting how all the alts are getting crushed a lot further during this period, but this is not strong. This is not generally strong. Could it be different? It could possibly. Is it likely? In my opinion, not so likely. In other words, Bitcoin could start mooning and the alts could hold their value and maybe claw their way incrementally up, and you could get an increase in dominance. But everything that we've seen so far is down dominance, good for all crypto, including Bitcoin. Up dominance, bad for crypto. Bad for crypto in most instances. We had in 17 a major Bitcoin run when everything else wasn't. That was during the Bitcoin Cash was about a split. If you held Bitcoin, you got Bitcoin Cash. So everybody sold their alts, charged into Bitcoin to get the free tokens. You may remember that. And that was Bitcoin dominance up. The rest of the old market okay, largely flat, slightly up. Bitcoin throwing it up. That was the why. It was obvious. It was specific event. Could you get a specific event that could create that criteria? Again, possibly, but not the dominant scenario. I'm here to talk about probabilities. So we're going to drill down on that dominance a little bit more, because I say when we do assessments, we do deep assessments. We don't just have a little stab at it, we have a proper stab at it, and I'm going to show you a couple of things that came out of it. Let's just put the lines on here. So here, first of all, that falling wedge in gray. Second of all, note the multiple touches and the marginally lower lows. You've got your 39.66 marginally lower low, marginally lower low, 2 marginally lower lows, each one slightly lower. All these blue circles, as you move right, the one after is marginally lower than the next one. That is how you put bottoms in on charts, typically on balance of probabilities, not how you do continuation patterns. This is your head and shoulders collapse, falling wedge on Bitcoin, the price against the USD, more than it is where we are now. And that's why I highlight the difference between these two events. So let's just show you a couple of things. Let's drop it from daily to say 12 hourly and just give you a little bit of micro analysis so you can see how we really look and how we apply key levels of significance. One of the big foundational chapters of our content that you'll learn about if you were to come on board. So here we clearly have a bit of a neckline at the 42.5. You had a left shoulder, for example. So this is micro-analyzing the lows. Reversal, head. See that wick touch? Again, 42.5, right shoulder. There's your fake break and a little dip back. Target made. You see that purple line? Target made. So there you go. Dominance to there. This is what we've been seeing. Everyone has been saying, Oh, why are you short? Why you're not a bull? Why are you not a moon caller? I'm busy illustrating to you a number of the reasons and motivations as to why. New neckline, 45%. Left shoulder, head, tiny right shoulder, died at our target level of 45.4. Break, return move, skid, 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 skid. Not yet made target, supports legacy neckline of the previous inverted head and shoulder, gets a bump, does an M, double top, down, 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 makes the target now, churns where there is key levels of significance multiples, churns, 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 spiller, new low. Okay, so now you know that's what happened up until December. Let's cover what's happened more recently. Let's pull it through. So you can see these clusters of key levels and where they've come from. Let's just do that. So there you go, churns, churns, churns. We made that target. So you made the inverted head and shoulders up move, bearish for crypto, up for dominance. You then had a rest, a head and shoulder and down. You got a rally. That was the snapback rallies that you started to think, bottom's in, everybody's bottom's in, and it's not the case. So here you have a bit of a W bottom. Again, marginally lower lows, hammering out a low. That gives you a neckline roughly at the 41%. Where's that going to top out? At the 42.68. Target made over there. Boom, chakalak. This is all bad period for crypto. Relatively, Bitcoin is becoming a larger percent of the market cap. It is going down less fast than the likes of ADA and all the other stars, DOT, and all the other worse shitcoins further down the rack. Now, you've been churning for a while, and this is what's confused everybody. You've been churning for a while. Why are you churning for a while? We warned inside the community that you're going to get churned for a while. And by the way, dominance is going up as we're speaking. We're now on a lower time frame. Why are you churning? Quite simple. Key levels of significance right there drawn on the chart. The upside target from the W bottom, that's come from there. The neckline from the previous head and shoulder, the inverted that I gave you that sits down there at the previous cluster low, the target from the head and shoulder to the downside that came to there. All three of these levels running through here. Cluster of key levels of significance. So you came quickly up to this zone and then you pull back, rally, pull back, rally, pull back, bounce around. Battling to leave a key level of significance cluster. So dominance is sit here. That's why it's felt like watching paint dry in crypto right now, because you've been churning, 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 churning. The problem we all have in terms of crypto, the reason why a long time ago a bulk of our community is in stables and is safe and has locked in their value as Bitcoin value is possibly and has gone down for now and possibly to go down further, is that this structure is likely to, when it resolves with this churn here, this churn box area with the three key levels of significance, a neckline, two separate targets, all at the 42.3 to 42.6%, is that you break to the upside for the reasons I've already given. Maybe you get one final dip, then you break to the upside. Again, if you think that's going to be bullish for the entire crypto market cap, it's just Bitcoin going up faster, go long Bitcoin. If, like me, you think it's contraction further in the crypto market and Bitcoin is marginally less contracting against a strong dollar, then you should be 100% in stable coins, and you should have selective shorts on a high beta alt with an excellent pattern. Go look for who we chose in our previous videos if you want it for free. If you want to find out how, why, and the detail, it's a chance to get into the community. You could pay for your entire program and more in a single trade. That's not a promise, it's not a guarantee, it's just what many people have done before. Don't stand in the way of learning and getting better. It is such a pity. You are going to lose so much with your hodl if we turn out right. You will have paid for umpteen courses. You don't even need to have more than, you don't even have to have a 6-digit sum in here. This contraction could be substantial. This contraction could be substantial. Bitcoin dominance up is not your friend. The next cluster of key levels, and can I tell you, Bitcoin will be quite a bit cheaper because this is very sensitive measure. You drop 1% in Bitcoin dominance, you're having a major bull move, generally. You gain 1%, and you've had 15% drops on Ethereum, you've had 25% drops on mid-cap alt token, and you've had at least 7% off on Bitcoin. This move, before you rest again, will probably, next rest level will be where you'll churn for a while, is 45%. So from the 45 to the 45.5. That move from 43 to a number in excess of 45 is going to be at least 2%. It's going to be damaging. It's going to be damaging. It could come in two ways. Bitcoin going up for a while on the Bitcoin chart, more than the others. So it doesn't only have to be down. For a short period, we could have Bitcoin a little stronger, the alts being heavy. But by the time you get here, there will also likely be Bitcoin coming back down and the alts riding the downside without getting much of the upside. This is not generally good. That is my view on balance of probabilities. And so far, our dominance reading has been accurate. This has not been a good time for hodling over the last period since this first dominance low. If we go back here and we call you out, the first dominance low was, wait for it, there, May. Well, it's the high of the market. By the time it had tested a second time, September, we didn't like this. By the time it was coming back down for another visit, we really didn't like what was building. And now, with almost 3 impulses, waiting for the third impulse to conclude on Bitcoin dominance, we doubly don't like it. Can you get some rallies in between while Bitcoin dominance? It could even do at this level, as I say, a dip down to here, and everyone will be like, you're wrong, you're wrong, you're wrong. No, I don't think we're inaccurate. Where's the invalidation point? So you must always have a view, and you must have a level at which you are invalidated. Our invalidation point, it starts to be an invalidation point if you're to run that low. If we run the low of that dominance, and if it starts to be a runner through there, it could test and kiss it and then bounce. In other words, it comes and makes a flat bottom or a marginally lower bottom to a degree. So there's still a possibility it can still do it if it were to come down. But that, as you will agree, is a long, long way from where we are right now. You're at 43.15. And we're already looking at a level that's around 39. Just imagine that, guys, how much the prices will have to change. What kind of a rally will you need out of alts to take back the better part of 5%? I don't see it, but even still, it would still be valid as long as it's still on this grind line. So it's not a perfect level, but it starts to come under question here at around the 39%. You could bounce just after and then come smashing back up and then go, or just go straight and go with a return move. Those could occur, but I would say the 39.3. So it's a long way off, and it doesn't look too much like it's about to happen. But you can get an easing part of the way, and you could bounce off one of these levels. We've got the levels on here. You can see them. These all came out of patterns. You bounce on that neckline, and then you go. And then you run into all the key funnel levels, see all these legacy levels. Now that would be an incredible Bitcoin dominance run. I'm not predicting that. I'm just showing you the values of key levels of significance. At some point, I think you would probably turn as well before then. But the damage it does to crypto for Bitcoin to be dominant generally, in my opinion, in most cases will be negative. Okay, so small run through the totals. I'm going to have a little giggle and do something we call the top on Hex. Guess who likes to talk about calling the top on things? So yeah, that's my little giggle, but I'm not trying to antagonize the person in question, if you know who I'm referring to. But that was the top on Hex and a head and shoulder. So for people that are in there, down, 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 leaning on support here, really needs to get off this. Bounced once, it's already broken its over performance bands. You might get a bounce, but the longer term run is that E-Hex, I think, is going to surrender this key level. And that key level there at is around 11 if I stand corrected. So let's just do this for hexagons. And by the way, we did say a couple of times, get out at your 22, even up top here. Once you broke here and you got your return move, get out at your 22. Well, you're now getting out with about 55-60% of what you could have got out there. Over here we said this was a bear. That was at the break of the 37.5. So that was the top call of 51. Get out at 37.5 bounce. So that doesn't look strong either. It's going to take a bit to keep everything up, and it's underperformance period. What about totals and Ethereum? So I'm going to do a very short version on totals and Ethereum. So that's total 1 with Bitcoin in it, 1.8. As I've already said, you're going to watch it go up and you go, oh man, he's already wrong. Unless you get up to roughly the same level and you hold on really strong and you put a very mild like right shoulder dip and you do the W bottom. If you do that, that is one of the ways price behavior fixes this. And then you can go up on total. Remember, this first total has got a lot of Bitcoin in it. That's how you fix it. It's the only way. Your problem is that you didn't make the same level of low. This, we typically treat the wicks as a trimmer event. You've got that, and you got that, and you got that. And that hasn't worked out well generally for the crypto markets. Let's take Bitcoin out of it, and let's have Ethereum as the big dog in here. Again, messy chart, lots of work done on it. Some of that can get tidied up. That was a previous instance where we highlighted a basing, ascending grind line and a broadening structure, by the way. And we said, this isn't continuation. And then you got this tiny little squeeze flag up against our basing, ascending grind line. My friends, my friends, my friends. And this was after a downside channel. Everyone, bottoms in. Look at that sharp rally. Look at that sell-off. Look at the structure. An ascending, broadening megaphone. And we do megaphone full analysis that traditional technical analysis doesn't do. So they only have megaphones. They don't have an ascent, a descent. They don't have a trend pre-structure, a pole analysis. And that's why people don't get any of the information they could be getting from megaphones. Go and find out. Go and be better. Your skills come first, then the money. If you're just chasing money, money runs. Develop skills, money comes. Rally back into the funnel. So you smash the funnel with momentum, you rally back into it, resistance, spiller, thriller. And there you are. And you are heavy here. You haven't zipped back up to meet that line with real momentum that required for a W bottom change in trend. This is heavy. This is spending as much time down here as you did here. And in actual fact, this one was more upward biased than this. This is heavy. You are building volume by price here. The weight is on the floor, not tapping the ceiling. And that's what you actually should be doing. Tapping the ceiling if you're to go up. You're not tapping the ceiling. You're leaning heavy on the floor. The hang time down here is too much. This is total crypto without Bitcoin. Total 3, that's without Ethereum, who's also a standout. So this is if you're the Solana, the Binance token, are you going to be safe? The answer generally is no. This is not good structure. You did, it is interesting to see, you did get a marginally low here, but that's because the alts have been even softer than Bitcoin. And Bitcoin with Ethereum, even when you took Bitcoin out and we were just looking at total 2 and we had the Ethereum, you didn't have those lows. Bitcoin and Ethereum will determine the direction. Those two throw it down. It doesn't matter technically here that you made a marginally lower low, you will make another low. You'll go up and then you'll go lower again. So overall, this is not a good structure for our friends over there. By the way, don't forget, you actually have still in play on the total 3, which excludes. Look at that grinding there. Massive smash. A couple of neckline draws. We drew a neckline there. We've drawn a neckline there. You've got targets open and waiting to be met on total 3. These are your friends in Solana. These are your friends in all the other crypto market caps. I don't need to run the crypto market cap for you. We can see how it's going for today, but that's going to be just a general indicator. Let's put him on coin market cap. By the way, there's some great trading opportunities in other markets for those of you that are traders and you've just missed the ruble. So crypto right now is a tough market, and you want to bias flat on most tokens, preserve capital, and the occasional well-chosen short. So look at that, 24%, so you're up 4%. I'm making essentially an on balance of probabilities bear call into a market that is net up over 24%. Everyone else is bull heroes. Luna up quite a bit. Everyone else is bull heroes. Only thing that's flat or slightly negative are your stables. People are getting back in. Woohoo! Bottom is in, buy sheep, charge. Okay, I'm warning you. You're hearing it from me, I'm warning you. Do not be a chaser of the current momentum. In fact, if you look at the 7-day percent, Bitcoin's actually up 5% almost. Ethereum's up 3%. Binance tokens up 1%. Luna is an outlier. It's at 60%, but Solana is up 6%. You're at $95 for Solana, 276 AVAX. There's 5% for DOT as well. We're now outside the top 10. And into the face of all that momentum, we are saying be careful. Be careful. Do not lose your head. Bitcoin is at 40 grand. It can run the 42. It can go up to 43. And it still doesn't mean you're away. If it goes up slowly and doesn't have real bounce back ability in its move up here, and even on Bitcoin, these are not really a W bottom. They are a bit far apart. It's a stretch. And that makes it more like a grinding continuation. Bitcoin is the king of direction for the crypto market. If Bitcoin smashes down in these general market conditions, it's a very tough take for the general alt market. Yes, you can have a Luna that's released some news and is properly surging. You can have, there's always 1 or 2 tokens that are counter trend on the day, but generally even over a week, 2 weeks, a month, even those that were counter trend strong on that day are down over the course of the month. So be careful out there. That's your warning on crypto. We're not moonshouters. We don't tell you what you want to hear. Shouldn't hate on people for giving news you don't want. It should test your hypothesis. The rational people are the people that like views that are contra to their own, and those are the people we value. Those people, if you're one of them, hit the like button right now, hit the share button right now. You have now seen the combination of the total markets. You've seen me reiterate why we said HEX should be sold as well for the hexicans. And Ethereum is in a similar structure. Ethereum, similar structure. The two God markets, why is it like that? Because Ethereum follows Bitcoin. So if Ethereum follows Bitcoin with its huge market cap and all its special projects and Vitalik and big stars and everything, your little token that you happen to have in, believe you me, on the long run, on balance of probabilities, follows Bitcoin. So if they both have, and look at the acceleration of this, one, wham, that is first selling leg. Normally the third selling leg, which is the second selling leg, the third wave, is the biggest. Fourth rally, you had such a capitulation in wave 5. Wave 5 was your harshest sell. Why do you think you get this reaction? There, because you had such a capitulation sell. There was so much bad news. Then you get the snapback. And where are you now? You came right the way back down here. This is heavy, guys. This is truly heavy. By the way, we also gave the inverted HVF in there. That's right. From that sell down into there. 1, 2, 3. Bang. And sell off. There was real structure. In fact, it was Binance that we did that one on. It was slightly imperfect on Ethereum. So Ethereum, it's the same game. The story remains the same. We'll take one other alt just to throw in a bonus one for you. I'll do it on Binance because it's actually been previously relatively strong. You can see that inverted there. Bang. First in a new trend. Major overperformance. First in a new trend are really the last in the trend. And that came out of that nasty little cell. You set up the structure, draw it in blue, up you go. 1, weaker grind. 2, down, down, lean, smash, return move. You're wrong. Smash the target. now progress, decay period of rally. We talk about the 5 stages of breakouts. There's so much you need to learn, guys. There's so much good stuff, and this is a broadening structure. It ain't necessarily over. Unfortunately, other cycles have superimposed themselves on the Bitcoin cycle. So it's no longer about crypto. Once you reach a certain market cap and you have institution peoples, it's no longer about the crypto. You go, one other gift for you on the dollar index to analyze, and then we are done. Don't forget, book a call on www.themarketsniper.com. Squeezing higher the dollar. A little bit wiki. It's probably have a rest itself. That will give Bitcoin its rally. So straight after this YouTube, all the haters are going to come on and go, you're wrong. Why? Because Bitcoin will trade 40K, it'll trade 40 and a half, it'll trade 41, it'll trade 40 and a half. The dollar will be doing this, a little bit of a rising wedge. We've drawn it, a bit of a spillback, bit of a rest. It'll churn up, and everyone will going, yeah, dollar shit, fiat system will fail, you fool. How come you're backing the fiat system? No, not backing the fiat system. I'm just reading the tape as it comes out. So this fizzle a little bit. Bitcoin goes up to 42 and a half. If you want to trade short-term long on a 15-minute chart, go ahead and do it. I don't think it's the smartest thing people do, but you know, people will do what they want to do. But I think you're going to get a bit of a bounce, and I think a fair amount of it will be in Bitcoin, and you'll get further percentages like you saw in the coin market cap. It's not about this week. Like I started this video, it's where will you be 2 weeks, 3 weeks, 4 weeks time, 5 weeks, 6 weeks time. What is the next major move? So you're going to get a little bit of ups in crypto across the board. Everyone's going to think bottom in, bottom in, bottom in. You're going to get set up to fail. Be warned. Those are great opportunities actually to reduce holdings into that strength and lock in and save. In my opinion, not advice, on balance of probabilities. Dollar will come back a little bit. It will rest a little bit. The ruble's been crushed. The first thing that happens is you breathe back down again. Okay guys, that's it. One more time, hit that like button if you haven't already done. Subscribe if you haven't already done. If you want more updates similar to this, you know what to do. If you want to actually get the full view and really grow and have be part of us within the room with our amazing community, hit the link, book a chat. Not everybody is let on, I'm afraid. We make sure you're not fantasists. We need solid people. We take high quality people. It's a material investment that you make, but it's chilled, relaxed conversation with true experts that have traded HVF method, that taught and made the same decision that you're thinking about doing right now. You'll learn all about them and their experience, as well as finding out the platform that we use and everything we do. Okay, until next time, bye for now, and thanks for watching.